Hey guys, welcome back. I'm Angelo, and here is Kodo. What do you have in your mouth? Welcome back, guys. Those of you that are new, join us. Today, I want to talk about the importance of dollar cost averaging, a term that, if you're not familiar with it, you should probably look into it. We will also take a look at Tesla's performance today, a red day, but you will understand the importance of dollar cost averaging once I break it down. I'll also share my thoughts on a little bit about Bitcoin. But before we get into it, hey guys, if you want a chance to win 4 free stocks, sign up for Webull today. Again, if you want a chance to win 4 free stocks, sign up for Webull today. Those stocks can range anywhere from a couple of dollars all the way up to $1,600. You can be lucky and get stocks like Tesla or even Google. The key is to sign up today using my referral link. And when you sign up, you will have to make an initial $100 deposit. But as soon as you receive your free stock, you can actually take that $100 out and continue to ride. Join Webull now. Welcome back to Modern Moolah, where the focus is to ensure that everyone can grow their wealth. So today, I want to talk to you guys about dollar cost averaging. And you'll understand exactly why this is super important on a day like today where Tesla is actually red. The definition of dollar cost averaging is when an investor divides up the total amount to be invested across periodic purchases of a target asset in an effort to reduce the impact of volatility on that overall purchase. Now, let's say that in layman's terms. Essentially, if I were to buy in at the high of Tesla and the stock price was to go down, instead of being heavy on myself that I did not enter at the right time, with dollar cost averaging, I can buy at the high, and whenever it takes these dips, I can also take advantage of buying in at those opportunities. Well, what does that do? That allows for my average entry price to actually come down a bit. Now, let me explain why that's important, especially today. Tesla opened the day already in the red. Once Tesla started to take this nosedive down, I decided that this was a real good opportunity to get some more shares. Now, the importance of dollar cost averaging is that I wasn't perfect at it. I bought a couple of shares around this price here, around 620, and the price continued to go down further. Well, again, do not be heavy on yourself, because if you have more additional funds, you can still take advantage. So as Tesla continued to dive down, I bought in on 2 more entries, allowing for these entries to actually make me a couple bucks as the stock price started to go back up. Essentially, it's all about the averages. And with Tesla, if you look back, these were critical times to ensure that you were dollar cost averaging, because quite honestly, if the stock price started to go down, this is an opportunity to bring that average price entry down a bit. This is super important because once you're able to bring your overall price down, when the stock actually rallies and goes above your overall average entry, you're talking about more and more money in your pocket. Yes, Tesla was down today, down 1.67%, and even in the after hours, it was down an additional 0.44%. Like I mentioned about dollar cost averaging, with those 3 entries that I made today, 2 of them are actually still in the green. Not bad for a day where arguably my entire holdings are actually down. I can feel safe that with my new entries, I'm actually green. So even on a red day, there's still a lot to learn and there's still money to be made. Now, I know we all don't just have a cash pot waiting, but dollar cost averaging is a good tool to use whenever you do have some additional funds that can be added to trading. To wrap it up, Tesla continued to go down towards the after hours, and it's almost 8 o'clock, so the market will close soon. But with the last 2 days of having really small volume, something tells me that tomorrow and Friday will be some interesting days for Tesla, because a lot of FOMO is going to set in for those that haven't bought, before the S&P inclusion on Monday. Now, I don't know what's going to happen on Monday, nor do I know what's going to happen next week. If I did, I'd be filthy rich. But what I do know is that Tesla is not like any company we've ever seen. There is no other company to quite compare to Tesla. Now, switching gears toward the Bitcoin discussion. Now, I will make a video fully dedicated towards talking about Bitcoin and it as an investment vehicle. I think now is the right time for that technology. Blockchain is something that will change the world. Bitcoin is now over $20,000. So, I immediately jumped to the stock market first thing in the morning, and I took a look at Grayscale Bitcoin Trust, GBTC. And I bought a few shares knowing that this might rally today. And indeed it did. It's up 11%. So, a little secret, you can't buy Bitcoin in your brokerage accounts. However, you can trade GBTC. As always, I am no financial advisor. I'm just sharing my opinions to help you make your own choices. But do I think Bitcoin has potential to continue to fly? Absolutely. Over the next couple of weeks, keep your eye on GBTC. Now, as we wrap up, you have to ask yourself, what side do you want to be on? Next week is going to be something that we have never seen before. Many are expecting Tesla to have a pullback. Some are expecting Tesla to go crazy higher. You decide where you want to be. I can tell you one thing. I'm going to be dollar cost averaging and buying up shares every single chance I can whenever they're cheap. So if you found this video to be useful, please like and subscribe so I can continue to bring great content to you guys. I hope today's lesson of taking a red day and potentially turning it green is something that you will find valuable. So thanks for watching, guys. I'm Angelo. Here is Mr. Coda, still with something in his mouth, and we'll see you soon.